Good morning, students. Welcome to the visionary classes of ICAI. Today, we are going to discuss the material and employee cost and management accounting topic. So, first, let's start with the material costing. We'll pick up the questions from material costing for revision. Good morning, everyone. And through that, we will revise all our concepts. So, let's start with the very first question. When you talk about material cost, there are some things which you have to take care, like how will you record the receipts of material? How will you manage the issues of material? And how will you manage the storing of material? So practically speaking, if there are two questions, if they are correctly answered, the material cost management is substantially reduced or it's optimized. So the very first question is, whatever the material you require for production of any unit or any quantity or any product, how much unit of raw material should be ordered at one time? How many units should be ordered? So when we see how many units should be ordered, we have a concept called EOQ, which is economic order quantity. So this gives us the answer to how many units should be ordered at a time. And second important question is, when should the order be placed? So for this question, we have the concept called reorder levels. So if you know what the reorder levels are, what should be the maximum level, what should be the minimum level, what should be the reorder level, what should be the average level. If you can answer this question also, then also we say that you have taken a right decision, that you are placing your order exactly at the right. So these two questions become very important, and practically these two are very important from exam point of view also. So you should be able to solve these two types of questions for the material cost. So let us start first with EOQ, economic order quantity. X Limited is committed to supply 24,000 bearings per annum to Y Limited on a steady basis. It is estimated that it costs 10 paise as inventory holding cost per bearing per month. And the setup cost to run for bearing manufacture is 324. So economic order quantity when you have to order and economic batch quantity when you have to produce. So how many quantity you should produce in one run or in one go? So how will you optimize the run size for bearing manufacture? Okay. So let us first understand the concept of EOQ or EBQ. EOQ is economic order quantity. Okay, you have the answer also. Great. So economic order quantity means we given by the formula under root 2 into A into O upon C, which can also be written as under root 2 into U into P upon S. So A or U stands for annual usage. How much is your annual usage? O stands for cost of placing an order. In EBQ, cost of setup. And S or C stands for cost of storing 1 unit for 1 year. This is cost of storing. You can call it cost of storing, carrying costs, or holding costs. So why there is cost of storing, carrying, or holding? So if you have raw material, a lot of raw material with in your hands, or you keep a lot of raw material in your warehouse, you have blocked capital by making investment in the raw material inventory. So this blocked capital entails a opportunity cost in the form of interest. So what are the components of storing cost? So when you store raw material, you block your capital, and then therefore there is an opportunity cost that you lose interest on that capital or the return which you could have earned. Apart from this, there is the warehouse rent, the warehouse keeper's salary, then your raw material can require insurance. So the more the raw material you will have, the more the value of the raw material would be, and therefore the insurance premium would be higher. Then there is go down keepers. Then there is wear and tear. The things can get deteriorated. They can become obsolete or damaged. So these are the general components of your cost, which is included in the cost of storing. Cost of placing is when you visit the market or you ensure that your raw material is ordered and received. This could include freight, loading, unloading charges, or handling. So these are some of the costs. Now, very important thing is your placing cost and storage cost behave in opposite manner. How? Because when you order more quantity, the number of orders are less. So total placing cost will be less. So if you want to, for example, if you want to buy 12,000 units in a year, that is your usage, and it is evenly consumed throughout the year, let's say 1,000 units per month. So if you will order 1,000 units, you will have to visit the market or you will have to place the order 12 times. So your placing cost would be 12 into cost of placing an order. But if you order 500 units at a time, so then you will have to place 24 orders. So you have to incur the placing cost 24 times. Whereas if you order the entire 12,000 units, yes, so if there are insurance charges during the transit, like for ships, etc., all that will be a part of the placing cost, not of the storage cost. So insurance premium for goods or loss of goods, which is in stock. So if you order 12,000 units at one go only, you will have to incur the placing cost only one time. So the more the quantity you order, the less number of orders you place, and the total placing costs are less. However, storage cost will be high. So here you are going to store 500 units. That means you are going to store on an average 250 units. So the storage cost will be pertaining to 250 kgs or units. But if you order 1,000 units, then storage costs will increase because you are storing on an average 500 units, and the storage cost of 500 units will be more. And similarly, if you order the entire 12,000 units at one go, the storage will be of on an average 6,000 units, and therefore you will have to incur further higher cost. So that is the concept when you have added in purchase or ordering cost, right? So storage and placing behave differently. And if you'd like to take it on a graph where you keep on the x-axis number of orders, and here you keep the rupees or the cost. So the more the number of orders, placing cost tends to rise. And more the number of orders, that means less units are ordered, and the less unit means storing cost will be less. So storage cost tends to fall. So you have to strike a balance where the total of the placing and the storage cost is minimum. So that is generally when placing and storage cost are exactly equal when they meet. So this is the point when you have your these many number of orders should be placed. Or alternatively, you may also take on the x-axis units ordered. So more the units ordered, storage cost will be rising. So if on x-axis you have units ordered, and on the y-axis again you have cost. So more the units ordered, storage cost will rise, but placing cost will fall. Right? So you have to take care that what is there on the x-axis. If it is units ordered, storage rise, placing falls. But if it is number of orders, placing rises, storage falls. But we have to strike a balance such a way that the total of the placing and storage cost is least. Another important thing is when we are taking this decision, we are only considering placing and storage cost because they are our relevant costs. Although when you order products, you also incur one more cost, which is the cost of the raw material. So if the raw material is costing 5 rupee per unit, so 12,000 into 5, 60,000 would be the raw material cost. But if you order 12,000 units in one go, you pay 60,000 altogether. But if you order two orders, that means you order 6,000 units at one go, still you will have to incur 6,000 into 5, 30,000 twice. Purchasing or ordering cost are considered same here. Placing, purchasing, ordering cost. Okay. So the insurance of the ship freight, loading, shipping, insurance will be added in placing or ordering cost only, right? So 12,000 units into 5, 60,000. You are incurring 60,000 in one go. If you order 6,000 units, you have to pay 6,000 into 5, 30,000, but you have to pay 30,000 twice. So your total material cost still will be 60,000. If you order 1,000 units at one go, so you have to pay 5,000, but you have to pay 5,000 12 times. So it's again 60,000. So material cost remains same, irrespective of whether you place order for 1,000 units or 12,000 units annually. So material cost is not relevant in our decision. This material cost will also become relevant if the vendor gives discounts. If vendor offers quantity discounts, like he says, if you buy 12,000 units altogether, so vendor says if you will buy 12,000 units altogether, I'll charge you 4.5 rupees. If you buy 6,000 units at one go, I'll charge you 4.7. If you buy 3,000 units, I'll charge 4.8, 4.9. And if you purchase only 1,000 units in one lot, then I'll charge you complete 5. I'll not offer any discounts. In that case, the material cost also becomes relevant. And in deciding what is the economic order quantity, we will consider placing plus storage plus material cost as well. Okay. So this is the basic concepts of EOQ. Let us now look at the question once again. So here your annual usage is 24,000. It is estimated that the inventory cost is 10 paisa per bearing per month. So we have to find out the S or carrying cost, 1 unit for 1 year. So if it is 10 paisa per unit per month, so 10 into 12, it will become 120 paisa or 1.20 rupee per annum. So cost of storing 1 unit for 1 annum, 1 year is 1.20. And what's the placing and ordering cost? It is mentioned here, or the setup cost in EBQ, which is equivalent to 324 rupees. So you have all the three information, just put it under the formula. 2 into 24,000 into placing cost 324 divided by 1.2. So it is 218, 3,600 units. So at a time, we should manufacture 3,600 units. Right. So the first answer is, how many units should be ordered? It is 3,600. And then assuming that the company has a policy of manufacturing 6,000 bearings per run, how much extra cost the company would be incurring as compared to the optimum run suggested above? And what is the minimum inventory holding cost? So we have decided that our answer is under root 2 into U into P upon S. Whatever the variable you will use, you will define it before making the calculation. So where U is equal to annual usage. So it was 2 into 24,000 into 324 divided by 1.2 under the root. So we decided we will place order for 3,600 units, or if it is a production run, we will set up the machine for 3,600 units, or bearings you can write here. Now, the second part says, if we order or make 6,000 bearings in one go, what is the difference? So first, if you are following the EBQ or EOQ, you are ordering or manufacturing 3,600 units per run. So this gives you number of orders. So 24,000 divided by 3,600. So it's giving you a fraction, 6.67 runs. Now, theoretically, it is possible that you have a production run in fractions, but practically it is not possible. So you can mention this, though practically it may be possible to go for 6 runs or 7 runs or to place an order 6 times or 7 times. But for theoretical calculations and comparing with 6,000 bearings, let us take that there are 6.67 runs. So the cost of a setup would be 6.67 multiplied by 324. So it will come out to be 2160 rupees. And storage cost. So if you are having 3,600 units, on an average, you are going to hold 1,800 units. And the cost of holding 1 unit for 1 year is 1 rupee 20 paise. So 1,800 into 1.2, this is again 2160. So the total of your placing plus the storage cost comes out to be 4,320. So how do you calculate the placing cost? You divide by quantity ordered. This will be number of orders multiplied by cost of placing an order. How you calculate the storage cost? How much quantity you order, divide by 2, because on an average you will hold half, multiplied by cost of storage. So here, placing cost was calculated 24,000 divided by 3,600, which means 6.67 times, and 6.67 into 324. Storage cost was 3,600 units are ordered. On an average, 1,800 will be held. 1,800 into 1.2, this is 2160. And you will recognize here that the total of the placing and storage are exactly equal. At EOQ or EBQ, the total of placing and storage can also be calculated using this formula. So you will see 2 into 24,000 into 324 into 1.2 under root. This will also give you 4,320. And when you will divide it by 2, so on an average, it will become half. Half of it will be placing and exactly half will be storage. So they will always be equal. But if you place order for 6,000 bearings, then what happens? So you're placing, what will be the placing and storage cost? I'm doing the calculation here. Placing cost would be 24,000 divided by 6,000. So 4 orders would be placed and 4 into 324. Your placing cost would be 1296. And what will be the storage cost? 6,000 units ordered. On an average, 3,000 units held, and 3,000 into 1.2 is 3,600. So the total of placing and storage will be 3,600 plus 1,296, which will be 4,896. Now 4,896 is more than 4,320. So minus 4,320. The extra cost you will incur is 576. Good for all those who have done. So 3,600 is the optimum size and 576 is the extra cost you will incur. If you don't follow the EOQ, you start production of 6,000 bearings per run. And what is the minimum inventory holding cost? So minimum inventory holding cost will be when you order 3,600 units, which is 2,160. Okay. So I hope this is clear. Right. In the same question, if I ask one more question here, like what is the discount which the vendor should offer? What discount should the vendor offer so that you agree to the 6,000 bearings per run. So what is the extra cost you are incurring? 576. So if this 576 is compensated in the form of discount, you will then go for ensuring that you can go for 6,000 bearings per run. Okay. So whatever the extra cost you have, if that is balanced and if that is compensated by the vendor, at least 576, you may go for 6,000 bearings or to place an order for 6,000 bearings. Minimum holding cost. So when you say holding cost is not placing and storing, placing or ordering. So for holding cost means only the storage cost. Like I've written here, you can call it storing cost, you can call it carrying cost, or you can also call it holding cost. So at EBQ, the total of holding and storage is 4320, but the holding cost is alone at EBQ 2160. Now, as such, if you say what is the minimum holding cost? So if you go for very small production run, like just 10 units, you may have to incur the production run many times, but your holding cost will be negligible. So here it is assumed that the holding cost, total minimum holding cost at EBQ, which is 2160. Now, next question here we have of successive discounts. So when you have successive discounts, the raw material cost also becomes important. So purchase department of your organization has received an offer of quantity discounts on the order of material. So if you will order less than 500, 1400 will be the price. Anything from 500 to less than 1000, you get a discount of 20 rupees. So the raw material will cost you 1380. Anything from 1000 units till anything less than 2000, the raw material cost will be 1360. And from 2000 to 3000, it is 1340. And anything which is 3000 or above is 1320. Now, in the exam, the question may ask you that we are going to place an order for 500 units, check for 500, 400, 1000, 2000, 3000, 4000, and so. But if nothing is mentioned, then you will use any one value which is less than 500. Let's say 400, you can take. Then start taking these breakpoints: 500, 1000, 2000, and 3000. Your annual requirement is 5,000 tons and delivery cost is 1,200. Stock holding cost is estimated to be 20% of the average. So we have seen that storage cost or holding cost is given as per unit per annum, which is generally comprising of interest cost of inventory plus some rents of warehouse or space plus damage, deterioration, and godown keeper salary, etc. So this was given in the last question as 10 paisa per month. Here it is given as 20%. Now what you can do is the storage cost can also be calculated as 20% of your investment. So we have seen that the raw material is costing us 1400 rupees if we are going for anything less than 500 units. So let's say 400 tons. So 400 into 1400 will become my total investment. Divide by 2. This will give my average investment. And 20% of average investment will be my storage cost. So 400 into 1400 divide by 2, that is 2,80,000, and 20% of that It's 56,000. That becomes my total storage cost. If I order 400 units. Now, same thing can also be done if I'm ordering 400 units and 400 divided by 2, my average investment is 200 units multiplied by cost of storing 1 unit for 1 year. Now, what will be the cost of storing 1 unit for 1 year? Take the raw material price and multiply by 20%. So it is 280. So 400 by 2 into 280. 400 by 2, 200 into 280. This will also give you 56. Now, in this question, so the cost of storage will change with every unit. Here it is 20% of 1400, which is 280. Here it will be 20% of 1380, 276. Here it will be 20% of 1360, 272. Here it will be 20% of 1340, 268. And 20% of 1320, 264. So your cost of storing 1 unit for 1 year will change. So either you can take total investment, like 400 units are ordered, 400 into 1400 will be your total investment, divide by 2 average investment, and into 20%. Alternatively, you see, you can solve this part first. So this gives you 280 and then 400 by 2 into 280. Right? Now, in this question, the levels are given. At what levels you have to calculate that what is the optimum quantity. 400 tons, 500 tons, 1000 tons, 2000 tons. Cost of placing is given here as 1200. And usage is given as 5000. So theoretically, I'll keep the fractions, though I may write a note that practically it is not possible to keep the fractions. So we will, when you have material cost as well, you need to have one more column to calculate which is the best inventory ordering level. So it's specifically mentioned, take 400, 500, 1000, 2000, and 3000. So number of orders, that is quantity divided by units, usage divided by quantity ordered. So 5000 by 400. You will have 12.5 orders. 5000 divided by 500, 10 orders. 5000 divided by 1000, 5 orders. 5000 divided by 2000, 2.5 orders. 5000 divided by 3000, 1.67 orders. So cost of placing is 1200 per order. Right? The delivery cost per order is 1200. So 12.5 into 1200. The placing cost would be 15,000, 12,000, 6,000, 3,000, and 2,000. 1.67 into 1200. So you can see the placing cost coming down as the number of units ordered increase or the number of orders decrease. Let us talk about storage cost now. Like I said, you can do this. you can calculate it like this. 400 into 1400 is your total investment. Divide by 2 average investment into 20%. So it is 56,000. Alternatively, you can calculate 1380, 20% of 1380, which will be 276. And when you are ordering 500 units, on an average, you are holding 250 units, and 250 into 276. 1000 divided by 2 into 272. 2000 divided by 2. Why do we do average? Because we are consuming these units. So when you have ordered 2000 units, your stock is of 2000, and then from 2000 it is falling to 0. So on an average, you will be holding 1000 units. There will be a day when you have 2000 units. There will be a day when you will have 0 units because you have consumed all this. So in this entire period, on an average, you will be having 1000 units. So if you order 3000, your stock falls from 3000 to 0, from 3000 to 0 always. So on an average, you have 1500 units. So this will be your storage cost. Someone is raising a hand. If you have a question, please put it in the chat window. All right. 250 into 276. So your total storage cost is 69,000 here. You will see that this is increasing. As in when your number of units ordered increase, so you are storing more units, therefore your storage cost will increase. This is 1,36,000. This is 2,68,000. And then 1,500 into 264. This is 3,96,000. So storage cost is continuously $1,200 into 1.67. Okay. You write about this, keep 1,200 into 1.67 is 2004. But if I take 5,000 units to be ordered, divide by 3,000 units. So the number of orders is 1.666667. 67 is 2/3. So 2 by 3 of 1,200 is 800 and plus 1,200. So if you take it to the larger decimals, you will get an exact figure of 2000. You are getting 2004 just because of rounding off. So maybe that is approximately, you can write 1.67 and this figure will be exact 2000. So if you solve in your calculators 5,000 divided by 3,000 into 1,200, you will get 2000. Though technically, if you write here 2004, that appears to be the right answer, but more appropriate would be exact 2000. Okay. So placing cost, storage cost is mentioned, but we need here one more cost, which is material cost. So what is the material cost here? Ultimately, 5,000 units are purchased, no matter whether you are purchasing 500 at a time, 1,000 at a time, 2,000 at a time, or 3,000 at a time. The units purchased will remain 5,000 only, irrespective of how many you are purchasing at a time. So material cost 5,000 into 1,400, 5,000 into 1,380, 5,000 into 1,360, 5,000 into 1,340, and 5,000 into 1,320. So this will be your material cost. I'm merging these two cells. So this becomes 70 lakhs. and 5,000 into 20, 1 lakh discount. So 69 lakhs. Another 1 lakh discount, 68 lakhs. Another 1 lakh discount, 67 lakhs. You can verify this. 1340 into 5,000. Yeah. And 66 lakhs. Now our total cost will be calculated here, which you will add column number 3, placing cost, column number 4, total storing cost, and this is one column 5, the material cost. So total will be of 70 lakhs, 15,000 and 56,000. 70 lakhs, 71,000. 69 lakhs, 69,000. 81,000. 68 lakhs, sorry, not 68. 68 lakhs plus 1 lakh 36,000. 69, 36 and 6,000. 69 lakh 42,000. 67 lakh plus 2 lakh 68,000. 69 lakh 68,000 plus 3,000. 69 lakh 71,000. 66 lakh plus 396. 6996 and 2 lakhs. 6998. So which one is the least cost here? $69 lakh 42,000 is the least cost. So we are going to place an order for 1,000 units at a time. And we are going to place 5 orders, which means the raw material will cost us 1360. So this is how you will draw a table when you have two successive discounts. Alternatively, the first earlier question could have also been done using the discounts in the tabular form, or you can use the formula also. But when there is material discounts, don't go use the formula, always use the tabular method. Right? So this is how you calculate the EOQ. Carrying cost decrease. Carrying cost decrease. Carrying cost or storage cost decrease. Overall, it is increasing if you see 56, 69, 136, 268, and 396. If you're asking about this decrease, it is because the carrying cost is 20% of the inventory. So when inventory will cost you 1,400, so if you buy 1 unit for 1,400, you have to store it. 20% of 1,400 would be 280. But if the same raw material starts costing you 1,380, then 20% of 1,380 would be 276. So because there is a decrease in price, the storage cost, carrying cost is decreasing per unit. But because you are ordering more units, therefore in total it is increasing. Like I said, you place on x-axis units ordered. So you can see when your units ordered are increasing from 400 to 3,000, the placing cost is decreasing, but the storage cost is increasing, 56,000 to 396. However, if you place number of orders on the x-axis, so 1.67 orders are here, 12.5 orders are here, you can see that as the number of orders are increasing, your placing cost is also increasing. And storage cost is 396 to 56,000. And somewhere in the middle, you get the answer, that is 1,000 units should be ordered and 5 orders should be placed. Is it clear? Right. So this was about EOQ and reorder level. Next, we will talk about reorder levels here. When you talk about reorder levels, generally questions will give you what is your maximum consumption, average, and minimum consumption. What is your maximum lead time or the time it takes to receive the raw material? Maximum, how much will it take? What is the average time? And what is the minimum time to receive the material? So when we want to calculate the reorder levels, you don't need to draw a diagram until and unless you are specifically asked. This question generally comes for, can vary from 4 marks to anything. If there is too many details, it can go up to 10 marks. No credit available and ignore customs. Yeah, all that things you will ignore. All these you do. This we will consider when we are talking about the receipt of material. So all these don't have to mix into management of or reducing the optimizing the material cost. So maximum consumption, minimum consumption, and average consumption, maximum lead time, average lead time, and minimum lead time. If average consumption and average times are not given, you can use maximum and minimum. So maximum plus minimum divide by 2. And maximum lead time, minimum lead time divide by 2 will give you the average. Alternatively, if any of these maximum or minimum are missing, use average instead. Now, when should you place an order? Think about it. When should the order be placed? Any answers? Put it in the chat window. What is 450? Okay, in this question. No, I was actually asking theoretically, when should the order be placed? So order should be placed in such a way that there should not be any stock out. we don't want to stop our operations just because raw material is not available. So if we go for very conservative approach, which means no risk at all. So if you don't want to take at all any risk, then think that you will have maximum consumption and it takes maximum time to receive the order. So if you go by this formula, maximum consumption into maximum time, this becomes your formula for reorder level where you are not taking any risk. Let me give some values, arbitrary values to this before I take up the question. So if the maximum consumption is 10 units per week, average consumption is 6 units per week, and minimum consumption is 2 units per week. Maximum time it takes is 4 days, average 3 days, and 3 weeks, and minimum time is 2 weeks. So if I place an order, maximum consumption 10 units and maximum time 4 weeks. So if I place my order at 40 units, I will never have any problem that I can go stock out. Think of a scenario if I do a minimum consumption of 2 units and it takes 4 days. 2 into 4, 8. But I have placed order at 40. So I still have 40 units. I will easily be able to ensure that I have 8 units. Let's take average consumption. So if I was consuming at an average level of 6 units, and again it took 4 days. 6 into 4, 24. But I have the stock of 40 and my consumption is 24, easily manageable. Let me take a maximum consumption of 10 units. Let's say I'm consuming 10 per day. The production has all of a sudden started. And it took 3 days. So 10 into 3, 30. But I still have 40 units. I'll still not be stock out. Let's take the worst scenario in this period. You had a maximum consumption and the stocks were also delivered in maximum time. So 10 into 4, 40. But then I'm sure by now they will be delivered and I had exactly 40 units to ensure that my operations are smooth. So if you follow this approach, maximum consumption into maximum time, this is the approach where you will have absolutely no tension. No matter how long it takes, no matter how much you consume, you are not going to be stocked out. So this is one of the formulas for reorder level, maximum consumption into maximum time. However, the formula is not good, as you know that in finance, no risk, no reward. So being conservative means you are not taking any risk. So when you don't take any risk, the costs are high. And obviously, if you are storing, placing an order at a high level, you are going to store more units. And if you are going to store more units, your storage cost will be high. So we also have an alternate formula. Instead of going by maximum consumption, why don't we go by average consumption into average time? Take some risk. So what is the average consumption into average time? 6 into 3, 18 units. So place an order for 18 units. But if you want to take small buffer, you can take to keep some safety stock with you. So keep some safety stock for emergencies. Otherwise, place your order at 6 into 3, 18 units. Now, how much should be the safety stock? That is also a decision we have to take on the basis of striking a balance between cost and risk. So our cost should not be very high in order to reduce all the risk, but our risk should not also be very high in order to save costs. So there are two formulas that you can use for reorder level. One is maximum consumption into maximum time, which is 100% risk-free. And the second is average consumption into average time, but keep some safety stock. So now let us talk about the question. So this is your reorder level. Sri Ram Enterprises manufactures a special product Z. These are the particulars collected for the year. Monthly demand for Z is 1,000 units. Cost of placing an order is 100 rupees. Annual carrying cost per unit is 15. Normal usage, minimum usage, maximum usage. So these figures are your 75, 50, and 25. And reorder period is 4 to 6 weeks. So this is 6, 5, 4. Here 5 is not given, but 4 plus 6 divided by 2 will give me the average 5. Right? So this is the consumption 75, 50, and 25 per week. And reorder period is 4 to 6 weeks. So 6 weeks, 5 weeks, and 4 weeks. You have to take care of one important thing, that the lead time should also be in weeks and the consumption should also be in weeks. If the consumption is in days, convert it into weeks by multiplying it by 6 or 7. Assuming 6 working days, assuming 5 working days, or assuming 7 days in a week. But whatever you assume, mention that. So this is your consumption and this is your time. 75, 50, 25, and 6, 5, 4. Cost of placing an order is 100. Cost of storing 1 unit is 15. So first you have to calculate the reorder quantity, that is EOQ. For that we need the formula under root 2 into U into P upon S, or 2 into A into O upon C. Now, usage or annual consumption is issue here. Why? How much is the annual consumption? We are producing Z. Monthly demand of Z is 1,000 units. So annual demand is 12,000 units. But 12,000 is not our usage. 12,000 is not the correct answer. Why? Because we are interested in managing the raw material. So usage is 50 units per week of the material, and there are 52 weeks in a year. So 52 weeks into 50. $2,600 units is your usage. Why the difference? Why the confusion? Because here we are manufacturing a product Z. So this is the final product. If you have 1 kg of raw material, and from 1 kg of raw material, you can produce 10 units, right? And your monthly demand is 1,000. So you will have 1,000 into 12,000 units is your annual production. But 1 kg is required for 10 units. So if you divide by 10, your raw material consumption would be 1,200 kgs. So that is what we are interested in. We are not ordering the final product, we are ordering the raw material. The same question, if I twist it, Shriram Enterprises manufactures a product which requires raw material Z, and the monthly requirement or demand of Z is 1,000 units. Then your usage would have been 12,000. It manufactures a special product requiring Z, and monthly demand of Z is 1,000 units. Then you would have become 12,000. But in this case, it's the final product. So from usage, we will calculate the 52 into 50, 2,600 units. Now we have all the answers. 2 into usage is 2,600 units. Cost of placing an order is 100. And storage cost is 15. So 2 into 2,600 into 100 divide by 15 and under the root. So it comes out to be 186.189. Once again, I am avoiding the fraction here. So we will order at one time 186 units. What is the reorder level? So like I said, the formula for reorder level is maximum consumption into maximum time. So maximum consumption is 75 units per week and maximum time is 6 weeks. So 75 into 6, 450 units. So you're going to place an order when the number of units are 450. Now you see here, this is your reorder level, which is equivalent to 450 units. So you are going to place an order here for 186 units, right? So when you place an order for 186 units, when you already have 450 units, your level will rise and you will reach a maximum level when you receive these units. So what should be the maximum level, formula for maximum level? You ordered at ROL, reorder level, and you ordered the ROQ or the economic order quantity. So when you had 450 units, you ordered another 186 units. So this is the maximum level you will reach. That too, if you will not consume absolutely anything, but you are going to consume something, at least a minimum of how many units? 25. And even if you receive the order very quickly, it is still going to take a minimum time of 4 weeks. So until then, you are going to consume from this 450 units. So how much you have consumed, even if you consume the least, you would have still consumed 25 units and minimum it would have taken 4 weeks. So 100 units would definitely be consumed before you receive your 186. So 450 plus 186 minus 100, that is 450 plus 86, 536 is your maximum level. Sorry, 25. 25 into 4 is 100. So 450 plus 186 minus 100 should be the answer. Nagarajan, this is not what you are saying is not the correct answer. So maximum level is reorder level plus reorder quantity minus minimum consumption into minimum time. Reorder level at 450 units, 75 into 6. At this, you have placed an order for 186 units. So at the max, your level will be 636, but that will be the case when you don't touch the raw material. But you are going to consume a minimum of 25 units. I'm not able to understand, Nagaraj. 450 plus 400, 750, 200. I hope I have made myself clear here. Maximum level is reorder level plus reorder quantity minus minimum consumption into minimum time. So reorder level was 450 using the formula maximum consumption into maximum time. Then you have placed an order for 186 units. So 450 plus 186 minus minimum consumption into minimum time. So minimum you are going to consume 25 units and minimum it is going to take 4 weeks. So before you receive your 186 units, you would have already consumed 100. 25 into 400. So 450 plus 186 minus 100 is 536 units. If it is clear to you, Nagraj, please type in the chat okay or understood. Then you go to the minimum level. How do you calculate the minimum level? Minimum level will be calculated when you place an order at 450 units until you receive this 186 units. You are going to consume from here and your level will fall to minimum level. Now here, We assume that you are consuming on an average basis. So the formula for reorder level is minimum level is reorder level minus whatever you have consumed on average basis. So average consumption multiplied by average time is what you would have already consumed. So it goes 450 minus average consumption is 50 and average time it takes is 5 weeks. So 50 into 5, 250 you would have consumed, 450 minus 250. So your minimum level will be 200 units. So reorder level is 450 units. Maximum level is 536 units. And minimum level is 200 units. And then you have average. Average is minimum plus maximum level divided by 2. So either you can take 536 plus 200 divided by 2, 736 divided by 2, that is 350 and 18, 368. Or alternatively, you can take the average level as reorder quantity. You can take half the reorder quantity or the minimum level plus half the reorder quantity. So minimum level is 200. And half the reorder quantity is 186 of half of 186. So 200 plus 186 divided by 2. So in that case, you get an answer as 293. So you'll not get the same answers. You will get different answers when you use different formulas. Okay. So I'll write again the formula for maximum level, which is reorder level plus reorder quantity minus minimum consumption into minimum time. Minimum level, reorder level minus average consumption into average time. Reorder level, maximum consumption into maximum time. I have written this in this order because of a reason. You will see in reorder level, you have two variables to multiply. In minimum level, you have three variables to multiply. One, you will use three variables. And in maximum level, you will use four variables. Reorder level, reorder quantity, minimum consumption, minimum. So that you don't forget. Okay. So start with reorder level, 2, 3, 4. And further, the time or the consumption, this increases. Minimum, average, maximum. Right? So you will not forget this. And then comes average level. Average levels are either minimum level plus maximum level divided by 2. But a better formula is minimum level, that is the minimum you will have, plus half ROQ. So minimum is always there, and then you order some units which you consume from on an average. So that becomes your average level. And lastly, reorder level may have an alternate formula, which is safety stock plus average consumption into average time. So instead of being very conservative and going by maximum consumption into maximum time, you can also use safety stock plus average consumption into average time. Uh, how now I'll come on to the next topic. What should be the safety stock? And you have one illustration in your books. How do we calculate the safety stock? If you will understand this illustration, you will be able to manage the question or illustration in your book easily. The following information is available in respect of a particular item of inventory. No, there is no need. Maximum consumption into maximum time when you have taken, you have already gone very conservative. If then you want to add more safety stock, you are being overly protective. And we will see that that will require cost from your part. So business should not do that. Sorry. Business should not uh, incur cost. They have to manage their cost well. And that's how the cost accounting is all about, to optimize the cost. So safety stock, if you use safety stock, go by average consumption, average time. But when you're already going by maximum consumption into maximum time, there is 100% safety. So don't need to carry anything, any other buffer. Even if you do that, that means you are very risk averse. You are not considering costs at all. You are not doing your business in a proper manner. Business will mean taking some risks, right? Team, I can give you a 5 minutes break here, and then we can start this question. And in the meantime, if you have doubt from any other previous question, let me know. Okay. So after this, I'll start with the employees cost. So take a short break because then we will have this question, this question, right? And it, yes, So here is the question that we figure out what should be the safety stock. You would ask two questions. The first one was, can we add safety stock to maximum consumption? I think that's unnecessary and it will involve a lot of cost. Then second question is, can we solve ROL by the two methods in exam? Yes, you can do that. And you can mention that alternatively, this can also be the solution. So how does it work? This information is available in respect of a particular item of inventory of a manufacturing part. The daily usage is 2 tons with a probability of 0.2, 3 tons with a probability of 0.6, 4 tons with a probability of 0.2. So in the earlier questions, when we were doing minimum usage, average usage, maximum, we were all assigning it equal importance. But here the probabilities of this thing happening is different. So your average consumption would come using the expected value which you learned in your quantitative aptitude. So it's given by summation XI So 2 tons multiplied by 0.2 plus 3 tons multiplied by 0.6 plus 4 tons multiplied by 0.2. This is your average consumption. So it comes out to be 1.8, 2.2 and 0.8. 0.4, 1.8 and 0.8, 3 tons. Similarly, for lead time, so by chance it has come out to be exactly same as the average here. 25 into 0.2 plus 35 into 0.5 plus 45 into 0.3. 5 plus 17.5 and plus 13.5. So this becomes 36 days. Okay, so this is slightly different. This is 35, this is 36 days. So average consumption is 3 tons and average lead time is 36 days. Now, if you apply the ROL formula, safety stock plus average consumption into average time. So you have average consumption 3 tons, average time 36 days. So 36 into 3, 108. But plus some safety stock. Now, what should be the safety stock? That is what we are going to decide. So from this information, find the optimum level of safety stock and find the probability that you will get stock out. Carrying cost is 2,000 per ton and stock out cost is 8,000. So if you find yourself short of inventory, it will cost you 8,000 per ton. However, if you keep lot of inventory, it is going to cost you 2,000 per ton per annum. So what should be the safety stock? Now there is a concept of scenario analysis. Let's do that. So let's take the first scenario. If the usage is 2 tons. If the usage is 2 tons and it takes 25 days or 35 days or 45 days. This is what can happen. And again, if the usage is 3 tons and it took 25 days, 35 days or 45 days. Or if the usage is 4 tons and it took you 35 days, 40, 25 days, 35 days and 45 days. Is there any other possible scenario? So 3 possibilities in usage, 3 possibilities in lead time, So in totality, there will be 9 combinations or 9 scenarios. 2 turns, 25, 35, 45, 3 turns, 25, 35, 45, and 4 turns, 25 days, 35 days, and 45. So what will be your consumption in this period? 2 into 25, 50 tons. 2 into 35, 70 tons. 2 into 45, 90 tons. 3 into 25, 75. 3 into 35, 105. 3 into 45, 135. Now look at it. So far, there was no problem. Why? Even if we don't have any safety stock, we had placed that our order at 108 units, average consumption into average time. So if we have placing an order, reorder level is 108, and you consumed 50, there was no possibility of stock out. Rather, you had 58 units extra. Here also you were easily sailing through. Here also no problem. Here also no problem. Here also no problem. You had 3 units still left, 3 tons, but though it was margin. But here you are stock out. So if you don't keep any safety stock, and you have average consumption into average time as 108, and if it happens that you start consuming 3 tons and it takes 45 days, your consumption is going to be 135 and you will be having only 108 units. So for 27 units, you will be stocked out if you have zero safety stock. Then we have further scenarios. 4 into 2500, no problem. 4 into 35, 140. There is again a problem of stock out here with 32 units. You had 108, but your requirement came in this period as 140. So you were stock out by 140 minus 108, 32 units. And if it so happens that it takes 4 days, 4 tons consumption and 45 days, that means 180 units was required during this period. And you had only 108. So you were stock out again by 72 units. So these are the only 3 scenarios out of the 9 where you can go stock out if you keep zero safety stock. Okay. If it is 135, you are stock out by 27. If it is 140, you are stock out by 32. If it is 180, you are stock out by 70. Now look at the other alternate formula, maximum consumption into maximum time. So maximum consumption is 4 tons and maximum time is 45 days. So 45 into 4, 180. This is the maximum consumption. So if you follow this formula, you are having 180, you are ordering at 180. There is absolutely no chance that you will be stock out. In all other scenarios, your consumption is less than 180, so you are not going to be stock out. Therefore, when you have maximum consumption into maximum time, there is absolutely no need to have additional safety stock. So we will create these scenarios here. So the daily usage could be 2 tons, 3 tons, 4 tons with a probability of, now this had a probability of 0.2, 0.6, 0.2. And lead times were 25, 35, 45. Right? And this had a probability of 0.2, 0.5, 0.3. So 2 into 25, consumption is 50, 70, 90. 3 into 25, 75, 105, 135, 100, 140, 180. And we will also write the joint probability of this. So zero point 0.2 into zero point 0.2 is 0.04. 0.2 into 0.5, 0.10. 0.2 into 0.3, 0.06. 0.6 into 0.2, 0.12. 0.6 into 0.5, 0.30. 0.6 into 0.3, 0.18. You will find that the total of all these probabilities come out to be 1. 0.2 into 0.2, again 0.04 and 0.10 and 0.06. So you can check 4 plus 10, 14 and 6, 20, 32, 62, 80, 84, 84, 100. Right? Now, if you keep zero safety stock, you have 3 stock out scenarios when you are consuming 135, when you are consuming 140, and when you are consuming 180. And the stock out units are 27, 135 minus 108, 140 minus 108, 32, and 180 minus 108, 72. So these are the stock out scenarios, and you are stock out by these many units. And what is the probability that 135 will happen? 0.18, 0.10, 0.06. So possible joint probability of the scenario of 135 is 0.18. So it also means that if you're keeping zero safety stock, you are taking this much risk. 18 and 10, 28 and 6. You are taking 34% risk. So expected stock out units will be 27 into 0.18 plus 32 into 0.10 plus 72 into 0.06. So your stock out units will be 27 into 0.18, 4.86, 3.20, and 72 into 0.06, 4.32. So total stock out units is 4.86 plus 4.32 plus 3.20. So you are going to be stock out by 12.38 units, and stock out cost is 8,000 per ton. So you are going to be stock out by 99,040. The storing cost is nil as you are not keeping any safety stock. So the total of storage and stock out cost is 99040. So let's prepare ourselves for this scenario. Let us not get stock out in this scenario. Therefore, we keep a safety stock of 27 units. So you have ROL as 135, which means you are keeping a safety stock of 27 plus average consumption into average time. So 27 plus 108, your reorder level is 135. So if you have your reorder level as 135 and you keep a safety stock of 27, then your stock out scenarios are only two, 140 and 180. And if the reorder level is 135, but the scenario happens of 140, then you are stock out by only 5 units. But if the consumption is 180 in this period, you are stock out by 45 units. This has a probability of 0.10 and this has a probability of 0.06. So your stock out units are 5 into 0.10, which is equal to 0.5, and 45 into 0.06, which is 2.7. So total stock out units are 2.7 plus 0.5, 3.2, and 3.2 into 8,000. Your stock out cost would be 25,600. But you have to store 27 units. And the carrying cost is 27 into 2,000. So it is 54,000. And 54,000 plus 25,600. 79,600. And this means you are still taking 16% risk. 10% here, 6% here. You can call it probability. The probability of stock out is 0.16, or I can say 16% risk. So let us prepare ourselves for this scenario also. And let's keep a safety stock of 32 units instead. So if you keep a safety stock of 32 units, 32 plus 108, 140 is your reorder level. Then stock out happens only if the scenario is 180 and you are stock out by 40 units with a probability of 0.06. 40 into 0.06 is 2.4 units. So you are stock out by 2.4 units and 2.4 into 8,000. Your stock out cost would be 19,200. But because you are keeping 32 units in stock, 32 into 2,000, your carrying cost would be 64,000. 64 plus 19,200. The total cost come out to be 83,200. Appreciate here that you will not do half. You will not say that you are holding 27 units. So on an average, you are holding 27 by 2. Why? Because this is safety stock. This is not to be consumed. This will remain throughout. So you are not doing 27 by 2. Last scenario, if we keep a safety stock of complete 72 units. So your next level of stocks will come from here, 27, 32, and 72. There is no stock out situation at all. All you will do is carry 72 units, and 72 into 2,000 is 144. And your total cost would also be 1,44,000. Now see which one is the least here. So we should keep a safety stock of 27 units. We should prepare ourselves for 135 units consumption and take the risk that let's see what will happen if there is a 140 or 180. We are going to bear that. Okay. So this is how you decide what should be the optimum stock, safety stock. And like you can see here, 72, keeping the maximum consumption into maximum time and ordering level at 180 means a very high carrying cost. Right. 34%, okay. 0.06 plus 0.10, 0.16, 0.16 plus 0.18 is 0.34, which is equivalent to taking a risk of 34%. Here the risk is 0.10 and 0.06, 16%. Keeping a safety stock of 32 means a risk of probability of stock out is 0.06. That means risk of 6%. Here the risk is 0% of being stock out, but the carrying cost is high. So that's the risk. Right? So we have one question. You can try this on the similar grounds. Like delivery from a foundry takes 6 days on an average, but it can take as much as 10 days. So it can be 6 days, 7 days, 8 days, 9 days, 10 days. And the percentage of occurrence of 6 days is 75, 7 days is 10%, 8 days is 5%, 9 days is 5%, 10 days is 5%. Okay. So you have to calculate what should be the reorder point, what should be the safety stock if you are taking 15% risk. So when you are taking 15% risk, that means you are not prepared for the 10th day, 9th day, and 8th day. These last three figures have 555% risk. That means you are preparing yourself only for the 7th day. Okay. So you are on an average, it takes 6 days, but you are keeping stock of one extra day. So this means safety stock of 1 day only. What it is saying, IPL Limited uses a small casting in one of its finished products. Castings are purchased from a foundry. IPL purchased 54,000 castings per annum at a cost of 800 per casting. So your consumption is 54,000 per annum and production process is 360 days. So 54,000 divided by 360, your per day consumption is 150 units. So on an average, it takes 6 days. So if you keep safety stock as 0, you will be having your reorder level at 150 into 6, 900 units. Right. So we can calculate EOQ and everything here. 900 is the cost of placing an order and 300 is the carrying cost. But I am focusing here on safety stock. So 6 days is the average consumption. Safety stock, if you are not keeping any safety stock, then your reorder level is 6 into 150, 900. But if you're taking 15% risk, that means you are not prepared for the 8th, 9th, 10th day, but you are prepared for the 7th day. So you're keeping a safety stock of one more day. So 150 is the safety stock and reorder level becomes 150 plus 900, 1050. If you are willing to take only 5% risk, so this is the scenario you don't want to cater to. That means you will keep 3 days stock as safety stock. So 3 into 150 is the safety stock plus average consumption into average time. So 450 plus 900. Then your reorder point would be 1350. So you are taking only 5% risk, which means you are not ready for the 10th day, but you are keeping a stock of 7th, 8th, and 9th day if it goes beyond 6 days. Assume 5% stock out risk. What would be the total cost of ordering and carrying cost? So, okay. Firstly, you will calculate 2 into U into P upon S. So that would be 2 into 54,000 into 9,000 was the placing cost and 300 was the storing cost. So 2 into 54,000 into 9,000 divide by 300 under root. It comes out to be 1,800 units are ordered. So your carrying cost 1,800 divided by 2 on an average 900 units into 300 units, 300 rupees per unit. But plus there is some more thing. You are keeping a safety stock of 450 units. So you are not only going to hold on an average 900 units, but the 450 units of safety stock as well. 150 from where? 150 from 54,000 annual consumption and 360 days in a year. So per day consumption comes out to be 150, right? And it takes 6 days to receive the order. So 6 into 150 is 900, average consumption into average time. If you will not keep any safety stock, you are keeping yourself at risk of 7, 8, 9, and 10th day. So the probability is 10 plus 5 plus 5 plus 5. You are taking a 25% risk if there is no safety. 15% risk, then from backwards you can count. Ignore the 10th day. So you're taking 5% risk. Ignore the 9th day, another 5% risk. Ignore the 8th day, another 5% risk. In total, 15% risk. And if you are taking only 5% risk, then you are prepared till 9th day. So keep a safety stock for 7th, 8th, and 9th day's consumption. 3 days consumption, 450. Further, it is asking you if you are 5% risk, that means you are keeping a safety stock of 450. What would be the cost of placing an order and what will be the total cost of ordering and carrying cost? So carrying cost will be for 1800 divided by 2 into 300 as per EOQ. But because we are also keeping a safety stock of 450, so 450 plus 900 units will be kept in stock. This will be your total ordering cost, carrying cost, and placing cost would be, or ordering cost will be same. 1800 units are ordered, 54,000 divided by 1800. So you are going to place 30 orders in a year, like every 12th day, and 30 into 9,000, 2,70,000 would be the ordering cost. Rupees 270 would be the ordering cost, and 900 into 300, 270 would be the placing cost for the units consumed and ordered, plus another 450 into 300 for safety stock, right? So this is how you have to calculate. Let's move on to another question. I'll just explain quickly how you do the pricing of receipts. So you take the invoice price, you add the excise duty on this if it is no ITC available on excise or Sanvet credit and no credit available indirectly. If duties are, credit is available for duty, then don't add. But if no credit is available, this will become part of your cost. Net invoice price, and there is a sales tax also, which is 8% of the net invoice price, and there is a trade discount, 10%. So 20 minus 10% of 20. So your net invoice price is 18. So on 18, add 25% of 18 as excise, 8% of 18 as sales tax, 1% of 18 as insurance. So all these costs will be part of your raw material cost. Add a total of delivery charges. Container costs will be added. And if you return the container and a rebate is allowed, so it's costing you 60, but you will get back 40. So container cost should be taken as 20 rupee per container, which is an usual feature. So you return it within 6 weeks, you get 40 rupees back, and this is usual feature. One container load is rejected, not accepted. So loading, unloading, handling will be only for those containers which are accepted. And find out the landed cost of material per kg. So you will add all these costs, and 1250 kgs of raw material has been consigned out of which one container is rejected. So you will find out the cost of 1200 kgs of raw material. And last, in material, you have pricing of issues. So this is comparatively a easy concept. You follow different methods. FIFO, which is first in, first out. LIFO, which is last in, first out, or weighted average method generally. And this can be followed on periodic basis or perpetual. Perpetual means you are calculating the pricing of issues simultaneously. Periodic means you calculate the pricing of issues after a period. So let's take quickly one example. You had on 1st January 300 quantity, rate 8.5. There are some receipts. And then there are some issues on 2nd January, 11th January, 18th January, 28th January. So let me write the dates. 1, 2, 10, 11, 15, 18, 28, 20. Three hundred, 400, 500, and 400. Price is 8.58, 6, and 5.5. Issues are 100, 500, 400, 300. Okay. So far you have copied this data. So whether you're following LIFO, FIFO, weighted average, this much is to be done, undoubtedly. You can also calculate the amounts here. 2550, 3200, 3000. Now the whole question is about issues. For 1200, loading and unloading will be there, and container cost, both are affected. Right. Now, if you follow FIFO, you write your balance here. Like on 1st January, you had no opening account. So the balance is of only 300 into 8.5, which is 2550. So when you are following FIFO, you are going to issue from here only. Now, on 2nd January, when you are going to issue, what do you have in your stock? 300 at the rate of 8.5. So no matter whether you're following any method, LIFO, FIFO, weighted average, you have only one lot. So you will be issuing from here only. So 850 will go, and you will have remaining 200 units at the rate of 8.5, and 1700 would be the value of your inventory. Now what happens is, then you receive another 400 kgs at the rate of 8. So on this date, when you write the balance, you will write two figures, 200, which is at the rate of 8.5, and 400 units, which is at the rate of 8. So the total value is 1700 plus 3200. $4,900. Now, if it is 500 units are issued. So if you're following FIFO, first this 200 will go, and the remaining 300 will go from 400 units. If you are following LIFO, 400 this will go, and 100 from the first lot. And if you are following weighted average, we will divide 4,900 by 600. The rate will come, and we will charge the entire 500 units at that rate. So if you are following FIFO, It's 200 and 300 from the lower lot. So 200 of 8.5 and 300 of 8. So your balance will remain from here 100 units at 8. Had this been LIFO, it would have been 400 and 100. 400 at 8, 100 at 8.5. So the balance remaining would be 100 at 8.5. So now you have got only 100 units, which is 8 rupee per unit, 800. Then you again have received, so 100 of 8 and 500 of 6. So the total cost is 3,800. And from here, when you issue 400 units, FIFO, this 100 will go first. And the remaining 300 will go from the 500 lot. So the balance will be 200 into 6. 12. So this is how you will do. If this had been LIFO, you would have been issuing from like this. But in FIFO, you issue from first this, then this. And in weighted average, you merge the units and you merge the amount. And you divide and calculate a rate. And that is average. Okay. So this was all about material I could quickly take up with you. If you consider it normal loss, you have to divide it by the total units. Good units will bear that loss. If you will, let's say there are 100 units and 4% loss. So if 4% loss is normal, you will divide the total cost by 96 units. But if you consider it as abnormal, you will divide the total cost by 100 and take the cost of 4 units to the costing P&L account. So this was LIFO FIFO. Now we move on to our next chapter today, which is employee cost. Okay. I have taken a question here through which I will explain to you labor turnover. In employees, we calculate 3-4 concepts. One is labor turnover. Second is cost per hour of employee. Third is incentive plans, Rowan, Halsey plan, etc. So labor turnover means when the labor leaves the organization. Labor turnover is not something good. And we have 3 methods by which we calculate labor turnover. One is separation. The second is replacement. And the third is flux. Separation takes into consideration number of employees who leave the organization during a period. They leave either because they were discharged, terminated, resigned, or they died, any reason. So whoever left the organization for whatever the reason is the number of employees left divided by average number of workers in this period into 100. So if opening workers were 1,000, closing workers, custom duty, excise duty, sales tax, etc. in the previous question depends upon whether you get a credit for that. If you get a credit for it, you will not take it as part of cost. But if you will not get credit for it, then this is a part of your cost. Any taxes, duties, cess is part of cost in pricing of receipts. If it is not, no credit is available for it. All right, let's focus on labor turnover, separation, number of employees who leave the organization, divide by every number of workers into 100. Replacement is number of workers who join against the ones who have left. So if I had 100 skilled workers who left the organization in the period, and I had to hire another 400 workers to replace these 100 skilled workers because now I was getting unskilled workers. So replacement would be 400 divided by average workers. However, if out of 400, 350 workers were because I have expanded, they were new recruits because of expansion or other reasons, then I would say that these 100 workers have been replaced by 50 workers. Then this answer would be 50 by average. And flux is separated plus replaced plus sometimes new accretions. If there are new joinees like 350 here in this example, once again divide by average number of workers in the period. So turnover is measured in percentage. Those separated divide by average number of workers. Those replaced because of those who left divide by average number of workers. And flux is separated plus replaced plus new accretion. Now, if you calculate the rate of, let's look at this question. The rate of change of labor force in a company during the year as on 31st March 23 was calculated as 1385 under flux, replacement, and separation. So flux is 13%, replacement is 8%, and separation is 5%. When you look at 5 plus 8, it is 13, and flux is also 13. It is indicative that new accretions are 0. So first he is saying, how much is the average number of workers? We have one more information. The number of workers separated is 40. So this will sum up our entire calculation for average number of workers. So 40 is 5% of what? 40 is 5% of 800. Or when you will solve, 5 is equal to 40 divided by x into 100. You will get x is equal to 4000 by 5, which is equal to 800. So you have the first answer. How many workers were there on an average? 800. Now, how many were replaced? 8%. 8% of 800, 64. How many new accessions or new recruitment? As 5 plus 8 is 13, so there is no new accession. How many number of workers were there in the beginning of the year? All right. So let's say A number of workers were there in the beginning of the year. Out of A, 840 left plus 64 joined. So this is your closing balance. So opening was A and closing is A plus 24. And if you take the average of the two, you get 800. So that means 2A plus 24 is equal to 1600. 2A is equal to 1576 and A is equal to 788. So in the beginning, there were 788 workers. So out of 788, 40 left. So 788 minus 40. But 64 new joinees were there or because of replacement. So closing was 812. So average of 788 plus 812 will give you 800. We have one more type of question due to labor turnover. This is the management of Sunshine wants to have an idea of the profit or loss foregone as a result of turnover. Last year sales was 66 lakhs. PV ratio was 20%. So you know that for every 1 rupee, 20%, 20 paisa is the profit or contribution in the sales. We've done the marginal costing. This is revisionary lecture, so you understand PV ratio and contribution percentage. The actual hours worked by the direct labor workforce was 3.45 lakh. So 3.45 lakh hours total work was done. But there was delay by the personnel department in filling vacancies, because of which 75,000 potential productive hours were lost. So what we will do is we will calculate if 75,000 hours are lost, what is the sales foregone there because of this lost hours? And because of this sales foregone, what is the contribution percentage loss or PV ratio? So this will tell us that this is the profit foregone. So you work for 3.45 lakh hours. You have lost 75,000 potential productive hours. Actual direct labor hours included 30,000 hours attributable to training, in which the workers were 50% unproductive. So this 3.45 lakhs has 30,000 hours of trainee, which was 50% productive. So this was equivalent to only 15,000 hours. Remaining was fully productive, 3,15,000. So 15,000 plus 3,15,000. So technically you have worked for only 3,30,000 hours. So how much is the sales achieved in 3,30,000 hours? It is 66 lakhs. Okay. So now the question is simple. You will find out the sales achieved per hour. 66 lakh divided by 3,30,000. So rupee 20 per hour. So for every hour, you generate a sale of 20 rupees, which is 75,000 hours is lost. Now there is one assumption. If I assume 75,000 lost because of filling vacancies and another 15,000 lost because of training time, which was non-productive. So I'll say 90,000 hours lost. That means 90,000 into 20, 18 lakhs sales is lost, and 18 lakh into 20%. So my profit foregone becomes 3,60,000. Okay. Simple question. Find out the actual productive hours, find out the total sales, find out the per hour sale, and then calculate how much sales is lost by multiplying it with the productive time lost. So 75,000 lost because vacancies were not filled, and 15,000 training hours were non-productive. So total 90,000 hours were lost. So 3,60,000 rupees profit foregone, and plus all these costs, settlement, recruitment, selection, training. So this is the total loss due to labor. Here you will write a footnote that we assume the 15,000 training hours which were non-productive is not included in the 75,000 potential productive hours lost. But if there is an implication that this 75,000 includes 15, then we'll not multiply 90 by 20, 75 by 20, 15 lakhs, and 15 lakh into 20. Then alternatively, profit foregone would be 3 lakhs. Another type of question that you get is to find out the cost per worker. Now, before I proceed further, understand this concept. Training costs are factored at 50%. Therefore, I'm saying the 30,000 productive of the training hours will be 50% productive. So I am taking productive hours as 15,000 and 15,000 as non-productive hours. Okay, Kuldeep? Now here, calculate the earnings of worker A and B. So remember one thing, when you have two workers A and B, what do they get? They get their normal basic pay, plus they get some dearness allowance, maybe they get bonus, and then there are some statutory contributions like ESI, Employee State Insurance Contribution, which is done by the employer maybe. Employer contributes. Plus you may have some provident fund contributions by the employer. So this is the total the employer is spending on a worker. This is the cost of the employer for this worker. However, when he will receive the salary, this is not what he will get. So he will get only these three, basic, DA and bonus. And maybe the basic cost of employer, okay? But what B gets, basic plus DA plus bonus, and maybe he himself is also making some contributions. So contribution of employee towards ESI or PF, they will be further deductive. So if this is 100, 100, 100, 20, 20, we can say that the employer is incurring an expenditure of 340 for the employee. But what will he get from in his hand? 100, 100, 100. And if employee is also making a similar contribution, minus 40, so he ends up taking only 260 in his hand. So what he gets is 260, but what's the employer cost? It is 340. So because we are interested in finding out the employer's cost, we will take the employer's contribution as also part of the cost. Generally, PF will include DA also that you have learned in your taxation. So salary means basic plus dearness allowance until and unless it is specifically said that it is not part of the salary. Now, having explained that, calculate the earnings of worker A and B from the following for a month and allocate the earnings to job X, Y, and Z. Basic wages you will add for both. Dearness allowance 5,000, 8,000. PF on basic, so it will be only on basic 8%. So it is 800. And ESI is also 200. This is 8% of 16,000. So 1600 minus 320, 1280 and 320. Then overtime is also done. So here important is in here by chance there is not a bonus is not given. The bonus may also be given. Then you, if it had been given, you would have added that. Regarding overtime, if nothing is said, we follow the Factories Act rules or provisions, which says that the worker should be paid at double rate for the overtime, firstly. And when you take the double rate, then you also take the overtime as anything beyond 9 hours in a day is overtime, and anything above 48 hours in a week is overtime. So if the worker is working 9 hours each day for 6 days, it makes it 9 to 54. So 6 hours would be the overtime, as 54 is 6 hours more than 48 hours, right? So the normal working hours are 200 and overtime is paid at double rate plus DA. So overtime is only applicable only for the basic and DA. So this is 10 plus 5, 15,000 is the total wages for 200 hours. 15,000 divided by 200. So the hourly rate comes out to be 75. But because overtime is paid at double the rate, so overtime will be paid at 150 rupee per hour. So in 10 hours, overtime cost would be 1500. Employers' contribution to ESI and Provident Fund are equal along with the employees' contribution. So same thing here. Workers are employed on job XYZ and the overtime was done only for job Y. So how will you do the cost? 10,000, 15,000, 16,000 and 16,000 is the total cost for worker A plus another 1,500 overtime. Now this is to be allocated amongst X, Y and Z. So since A has given 40% time, 30% and 30%. So you will divide the 16,000 in the ratio of 4:3:3. Plus overtime is also overtime of 1,500. This will go for job Y. Similarly, you will allocate for B. How much is the total wages of B? 16 plus 8, 24 plus 1,600, 25,600. And this is to be allocated 5:2:3. So you will allocate this and this way you will be able to calculate what is the cost of job X. It's 19,200. All the best. Then 5,120 and 7,500. So this is the cost of job X. This is the cost of job Y and this is the cost of job Z. So this is how you will calculate or proportion the jobs in the three ratios. Okay. Next, you have incentive plans. So how the workers are paid. One is time rate. So if they have spent 10 hours, pay them for 10 hours. Let's say hourly rate is 10 rupee per hour. So if they work for 10 hours, 10 into 10, the worker will get 100 rupees. Let's say the standard time to manufacture one unit is 1 hour means 5 units. So if in 1 hour you are manufacturing 5 units and for 1 hour you are paying 10 rupees, provident percentage should be on basic wages plus DA. Bonus if it is specifically saying, otherwise not. Okay, Astha? So hourly rate was 10 rupee per hour. Standard time was that in 1 hour you should be making 5 units. This makes the piece rate that for every piece you should be paid 2 rupee per piece. 10 divided by 5. 10 rupees for 5 pieces. So 2 rupee per piece. So if we are going to give piece rate to a worker and a worker has worked for 10 hours, but instead of making 50 pieces, he has made 60 pieces. So 60 into 2, he would not be paid 100, but he would be paid 120 rupees. This is the piece rate. Now both have their defects. What is the defect here? There are two workers A and B. Both work for 10 hours. Both take away 100. He manufactures only 10 pieces. He manufactures 60 pieces. So worker A is totally lousy, not working at all, but yet he is also getting the same wages. This will frustrate B over a period of time. So if you had kept piece rate 10 into 2, he would have ended up getting only 20 and he would have got 120. So A would also think that I need to work hard. However, it is possible that in doing so, when B was making 60 pieces, B was not at all concerned about machines. He was not concerned at all about raw material, wastage, whether the machines require some kind of a rest and they should be given a rest in between. He will just be worried about making as many pieces as he can and not even consider or considerate about the quality of the piece. So that's the defect of piece rate. Therefore, there have been some incentive schemes which should motivate the workers, but which should also not frustrate or should not spoil the quality of the product. So some incentive plans have come up, like one which is based on time page. The most popular ones are Halsey plan and Proven plan. So what does Halsey plan says? Halsey plan says that all the workers should be guaranteed their time rate. So whatever the actual time they spent multiplied by hourly rate, this everyone should get. But if a worker is efficient, so if he's saving some time, he should also be paid for that, but not 100%, 50%. So I can say here, if he has made 60 pieces, 60 pieces should have been made in 12 hours. At this standard rate, 5 units takes 1 hour. So 60 units should take 12 hours. But he did it in 10 hours. So he will get his 10 hours into 10 plus half of the 2 hours that he saved into hourly rate, which is 10. So he will get 100 plus 10, not 120, but 110. Rowan suggested that he will also pay actual time. I'm writing now notations into hourly rate. But he suggested that the bonus should be paid or incentive should be paid based on time saved divided by standard time of actual wages. So if this worker was under Rowan plan, he would have got 10 into 10, 100 plus 2 by 12 of 100. So he would have got 100 plus 16.67. So he would have got 116.67 rupees. So his bonus would have been 16.67. Here it is 10. So you can see that Rowan has paid more bonus. But Rowan's bonus is a proportion of time saved by standard time, which is applied on actual time. In the same example, you will see if the work would have been done in 6 hours. In 6 hours, if he had made 60 pieces, so the standard hours to do the job is 12 hours. And therefore, the time saved is 6 hours. So under Halsey plan, he would have got 6 hours into 10 rupee per hour plus half of 6 hours saved into 10 rupee per hour. So 60 plus 30, 90. Under Halsey, 90, bonus as 30. Under Rowan plan, he would have got 6 into 10 plus time saved 6, standard time 12. So once again, this becomes 6 by 12, which makes it same as 1 by 2 into actual time, which is again 6 by 10. So it's not time saved. But if you are saving exactly, doing the work in exactly half the time saved is equal to actual time. So here you have in the formula actual hours, time saved into hourly rate. Here you have actual hours into hourly rate. But if exactly 50% is saved, then 6 hours, they will remain same. So this becomes 60 plus 30. So you end up getting 90 only. So at exactly half time saved, or when actual hours is exactly equal to half the standard hours, then Halsey and Rowan pays exactly the same bonus. So in the early stages, when time saved is 10, 20, 30, 40% of the standard time, Rowan will pay more. When time saved is exactly 50% of the standard time, they both will pay same. But if the actual hours taken here were only 4 and time saved was 8, then Halsey would have paid 4 into 10 plus half of time saved, 40 plus 40, 80. But Rowan would have paid 4 into 10 plus how much is the time saved? 8 hours. How much was the standard time? 12 hours. So 66 2/3 of 40. So he's paying only 26.67. He's paying 40. So up to a time, Rowan pays more. At exactly half, they both pay same. Beyond that, Halsey will pay more. So if hourly rate is 50 paisa, standard time producing 1 dozen articles is 3 hours. 20 dozen articles are produced. That means standard hours are 60, actual hours are 48. Therefore, time saved is 12 and hourly rate is 50 paisa. So under health save, 48 into 50 paisa, 24 plus 3 rupees of what is saved. 12 into 50 paisa, 6 rupees is saved. Half of that will be 3. So 24 plus 3 under Halsey plan, the worker will get 27 rupees. Under Rowan plan, he will get 24 rupees for 48 hours plus 12 by 60 of 24. 1/5, 24 plus 4.8. So he ends up getting 28.8. Right? This is how you calculate for Halsey and Rowan plan. Here you get one more this type of question. There are two workers A and B. They produce same product using same material. Normal wages also same. A is paid as per Rowan plan. B is paid as per Halsey plan. Time allowed is 50 hours. A takes 30 hours. B takes 40 hours. Overhead rate is 5 per hour's work. So 30 into 5. Here 40 into 5. And the factory cost is 3490 and 3600. So factory cost is a combination of material, labor or wages and overheads. So we don't know what is the material cost. We don't know total labor cost, but we do know that he's under Rowan plan and he's under Halsey plan, which is creating the difference of overhead rate. or the factory cost. Calculate the wages, calculate the material. So let the material cost be X. And let the wage rate be Y rupee per hour. So he is under row 1 plan. How much will he get? 30Y plus, how much is the time saved? 20. Standard time is 50 multiplied by 30Y. So this comes out to be 42Y. How much will he get? 40Y plus half of 10Y, 45Y. So you have to prepare a statement. So this gives you two equations. One is X plus 42Y plus 150 is equal to 34590. And second is X plus 45Y plus 200 is equal to 3600. So you have two equations, two variables. 3490 minus 150. Subtract the two. 3Y is equal to 60. Y is equal to 20 rupee per hour. And similarly, you will calculate for X. So this becomes 840. Therefore, X is equal to 25. Right? So this is another type of question which you may be asked using Halsey and Rowan. I hope this is clear to you. So I was trying to take up a MCQ also, case scenario. We are short of time, so you can try it out. If you have any queries, you can always paste it in the chat window. You can put it in the BOS portal also. Your questions and queries, they will be resolved. We have some doubt about container loading and unloading calculation. Container, we'll get back to that question. So you have the invoice price. Net invoice price is 18. On 18, you can apply the excise. You can apply the sales tax. You can apply the insurance. So it's almost 34% of 18. You will multiply it by 1250 units so far. If your concepts are clear, Nagaraj, you will be able to, conceptually, if you are clear, MCQ case scenarios can be solved very easily. They will generally be cryptic in the sense maybe you need to work backwards. I will upload the material, don't worry. PPT I will upload. Then you will add the 250 delivery charges. And then you will add 20 rupee per container, 1250 divided by 50. Okay. So 25 into 20 containers, 20 rupee per container, 500 you will add for the containers cost. After having added all this is your cost of 1250 units. So what you will do is you will subtract from this 50 kgs as one container is rejected. And now you will apply the unloading and handling only on 25 per kg. So 1200 into 25, 300 rupees you will further add. And then you will divide the total by 1200 kgs to find out the cost of material per kg. Okay. Yeah, you can write that it is assumed that you are not going to get any credit of excise and sales tax paid, right? So I hope everything is clear. If you want to take some screenshots of particular slides, you can take that. Like, please take the screenshot of this slide. I will share it, but you will not get the answer typed material. So you will only get the question. So you try to fill these figures yourself, right? You can take a screenshot of this, which is having all the formulas. Rest is all okay, I guess. Right. Thank you very much, everyone. I hope you will have gained something out of this revisionary lecture and it has been fruitful to you. Thank you so much. We can call it a day. Thank you. Yes. Thank you. Bye. Bye bye, everyone. Have a good day.